when you model what your business is going to be doing in 20 years' time, is it significantly different to what it is today?
Undoubtedly. I think that we always have a horizon risk around the concern that there's going to be a peak demand story. Our view is, of course, that we probably have to work, because primarily we're not in the oil business, we're in the sailing business.
Yep.
We have to look at whether we would move into different sectors and also when and what the timing would be of that. But I think that oil will continue to be shipped and used substantially for a number of years after the 20-year horizon. I think 50 or 60 years, there'll still be oil used in large volumes. So being a shipper of it will still be a viable business.
Paddy, how does the tragedy that we see playing out in the U.S., in Houston and in Florida because of Harvey and Irma, affect the shipping business globally?
Well, I think there's been a short-term impact around ships moving in and out of the US Gulf, which of course is a critical area for refining. Half of the US's refining capacity is on that coast. And we know that a number of the refineries were closed. I don't think there's been a significant amount of damage done to the refineries themselves. It'll take them some time to come back online, but there has been some panic buying so that Texas is a little bit short of oil. I had to go to two or three different pump stations to refill a hire car last week simply because people had panic bought. As far as the ships are concerned, there was a short-term spike in product carrier rates as people thought it would be necessary to import gasoline to deal with the outages from the refineries on the Gulf Coast. But I don't think this is going to have long-term consequences.
But you had a ship that was stuck, didn't you?
We did. A ship was effectively restricted to stay in port simply because of the level of silt that had been pushed into the waterway and the fact that the water level was very high and we had to go out under a bridge. So we were stuck for a week waiting for everything to subside and for the river to be dredged.
Do you think the stuff you'll be shipping will change? You talk about the fact that there will be demand. Do you think the stuff you'll be putting into the tanks will be different going forward from here? People are going to be trying to understand what they think is, if you're not trading gasoline, you're trading something else. If you're not into diesel, you're trading... does the product mix change?
Yeah, well, I think that at the moment what we can see is that obviously the car transportation accounts for between 20 and 25% of the market. I think that that's still going to be extremely important all the way through for the next 20 to 30 years. But what we are going to see, even as soon as 2020, there are going to be new regulations on the sulfur content of the fuels that we burn, and that's going to have an impact on oil trades. So there's going to be a real search for the right blends of oil for the old refineries to make sure that they don't have too much sulfur in their products. And for the more modern refineries, there'll be a real margin to be made on taking heavier oils and cracking them successfully to remove the sulfur.
But you don't expect... I mean, I was at the Frankfurt Auto Show yesterday, and it seemed like every automaker wanted to tout the amount of billions of euros it's investing in electric vehicles. Plus, we hear that internal combustion engines are going to be banned in a lot of countries over the next 13 years or 23 years. You don't expect, though, a significant drop in the volume of oil and gasoline used and shipped around the world?
Well, I wouldn't want to be at all complacent. And obviously, electric vehicles are very, very much the talk of the moment. But let's not forget, they are 1/5 of 1% of the global car park. So they grow fast, but from a very low base. And the problem with that growth at the moment is that growth has substantially been on the back of subsidies from government on acquisition or the waiver of certain import taxes. And the best example of this would be Norway, where they had this system, but they also have free parking or freely accessible parking in Oslo city centre for electric vehicles. So, of course, what happens is you have a huge sales of electric vehicles in Norway, and what do? They're used for local shopping. When the Norwegian wants to go away with his fishing rod, his gun or his boat at the weekend, he takes this 8-seater SUV, and their gasoline demand is not falling as a result of the increase in electric vehicles. And then secondly, we have a lot of electric vehicles that are hybrids, basically overly heavy, and we don't have statistics quite accurately to know how much time they spend in electricity and how much time they spend in fuel.
And as you say, they're quite heavy, so they may end up using the combustion engine to move a greater weight and end up, as a result, using higher amounts. Maybe the Norwegians actually want to take all of those things on their holiday, so they will need a big SUV. The IEA, so we've got IEA data coming out a little bit later on, and what they've been doing is they've been progressively revising lower what they think the demand story is going to look like. It was interesting, Citi published a note over the last few days saying that just doesn't fit with what they see in terms of the economic story. What are you seeing in terms of moving this stuff around, in terms of the demand that is out there?
So, I mean, the IEA, obviously, they set projections for future years, they revise during the year, and at first it seems bizarre, but they revise after the year as well to get their stats right. So I think the idea of revision is not something that's new. And I think, of course, the City researchers are going to have a completely different view of this from the IEA, because they're trying to adjust and precisely price oil value, whereas the IEA is a risk management organisation for worrying about the future. And Fatih Birol's big concern is, with no drilling going on, with no investing, where are we getting oil in 5 years' time? And I suppose that there's a natural inclination in that organisation to say stocks are coming down, demand is going to be threatening. What we've seen is plenty of good demand. We saw that OPEC cut, but they cut from a very high base at the end of last year, and it's demand that's dealing with inventory. So it's we expect inventories to come down, but it's on the back of the fact that we're shipping a lot of oil. We're not making any money because there are too many ships, which we touched on last time.
Yeah, we did.